Jim, let's talk about Morgan Stanley. They came out with their numbers. Now, they did beat earnings estimates, but that had a lot to do with that accounting trick.
Right.
However, they did have very good trading revenues, way better than their good friends down the street, Goldman Sachs.
Look, I'm wondering if not for banks, because I think banks are, you have to judge each one differently. But I think for investment banking, we might be seeing some sort of trough. I mean, a lot of these places were trying to figure out what to do, Dodd-Frank, and a lot of them also were overstaffed. And if you look at Goldman, it's not a disaster. They just got to get their costs down. If you look at Morgan Stanley, it's pretty good in the sense that they showed you they can still make a lot of money. Now, I know that everything's complicated by these DVAs. I wish they weren't there. I think that it's just very hard for people to understand what it's really worth. But, Morgan was at 20 when there was a lot of insider buying and people felt good. And then there was a spurious story on the web that said that they had $60 billion exposure to France. And
right.
we put together, it's total, there's $2 billion exposure to Europe that, just a horrifying thing what happened to this stock, frankly. I mean, the lies, there were just lies told about it in order to get it to be like a bear.
When they came out with their quarter, though, they didn't really touch on that exposure.
But they've now really given you a real breakdown. There is a real breakdown available. And the breakdown is very favorable and shows that they were never in trouble. And so you got to figure out, you got to say, okay, well, listen, what was it doing down at 12? Well, that was lies, of which a lot of us succumbed to because, you look at the website that talked about it and it seemed to have some legitimacy, and it didn't. It was not legitimate. Mm-hmm. And then you say, okay, well, where should it be valued? And I think that's there's a lot of companies right now, Deborah, where I'm trying to figure out what are they worth? What is Intel worth? What is Apple worth? What is Goldman worth? What is Morgan Stanley worth? And I'm wondering whether that isn't like limited Wall Street thinking, and that when you read the New York Times lead articles that Goldman's not doing well, isn't that the moment where you start thinking, well, wait a second, now everybody knows Goldman's not doing well. So maybe Goldman can reinvent itself. When I worked at Goldman, we were private, and we had some bad quarters, and we had quarters where municipals led, and then municipals fell off a cliff because of changes in the law. And there was always another division that came forward and did well.
Right, that's how it is in a financial firm.
Right.
When the fixed income did bad, the equity did well, and you always kind of somehow balance because one side of the house was doing poorly, but the other side of the house lifted everybody up. So you
you got rid of prop trading, because of the law. There was a 100-year storm at Goldman, and I'm not betting that there'll be another one.
Goldman went up, and Morgan Stanley was also up. So it looks like we're starting to come out of this bottom here.
There was a short squeeze too, and a lot of people were thinking, well, wait a second, Europe's gotten better maybe, or they're going to do a deal. Look, these stocks really went down ahead of the quarters.
They're down 40%.
Yeah, and the book value of Goldman is scrubbed. I really felt, one of the things I felt really good about, and book value is substantially in excess, selling, it's 0.6 times book. The book value is really scrubbed, and they took a lot of hits, and it's like hard to imagine taking any more hits. And so you really just kind of like they closed Goldman and just ran off the current business, no new business, and cut costs. They would be making a lot of money. So I think Goldman is, I don't want to recommend any financial.
Well, that's what I was going to say. Is this a gut call?
But I don't want to be short anymore. I've been saying short the financials in every lift. Short the financials in every lift, and I'm saying no.
Not
that's no longer
recommending it,
that's no longer the trade.
Not shorting.
Exactly.
All right.